final hour session. Just running a bit behind. We finished up a masterclass for Pinch Point, and we were pricing out a lot of trades. We finally found one. We priced out 18 trades. We tried on 4 of them to get filled, and strikes were a little bit off. I wasn't going to take a certain debit, and we just didn't get filled the prices I want. So we passed on those. But we got filled on one. Pinch Point Scanner has a new trade posted today for the alerts. We'll come back and tackle it again tomorrow for additional trades with workshop number 2, day 2 on the masterclass series. Thumbnail for today: will NVIDIA deliver? We have earnings tomorrow after the market. I want to do a full breakdown of the earnings play. I'm watching prices pretty closely here at the end. I'd like to see price stay within, if possible. If I get price less than 64.60, greater than 64.40, I have a $720 potential profit trap. So I'd like to see this little run that we just saw here try to fade back down into the close, maybe come to like 55 or back to 50 if possible. I hope that it does. This kind of came out of nowhere. It's just been kind of steady all afternoon since 1:55, right around the 2 o'clock candle, going up a little bit higher. I mean, price went from 38 to 61. That was the entire expected move on the day in about the last hour and 30 minutes after being just chop suey all day. So that does make my reverse iron condor trade also close out nicely. We took profit. It's trading down for 510, 505. So if you're still in that trade, you're getting most of that profit. So you can close that thing down for like 510, 515. Take $1 out of the max $1.10, or some traders this morning in daily profit room got filled at $1.15, $1.20 for that net credit. So try to take as much out of that as you can. I ended up grabbing $70 out of the max 110. So I'll take that. And then I'm looking to see if I can get a butterfly spread that will hopefully come back and pin between 55 and 50. I'd like to see this little candle right here come back and get retested if possible. So coming up here, just kind of, we've got 25 minutes left. If it, hits a little bit of resistance and a call wall, maybe come back down to refill this candle and see if my profit will start to fill back up. This is what the trade looks like right now. It is 335. So here's 335. Price is trading at, where are we at right now for price? Price is at 59. So 59. Unfortunately, there's a little bit of risk there. We come back to 55, however, that's looking better for profit. So 50, 60, 40. My debit was way cheaper. So actually this options, the option strat is a little bit off because I only paid $280 for this butterfly. So my break even will be over here around 657. So 657 break even. Actually, it's over here. So 657 is my break even, and 642 is my break even. So my profit trap looks more like this on the day because I got in earlier, and that's my profit trap. So we'll see if we can get a little bit of a fade. Maybe come back to like 64.55. There we go. So we're at 58 right now. Check on price. There's my call fly. It's down about $30. It was up $180 like literally 30 minutes ago. And then we had a big pop of the upside. So kind of frustrating. But again, the nice part about this final like 20 minutes is if I'm even remotely right with this thing coming back down. Let's go back into this is my DPP. So let's go 5-minute SPX. We're trading at 57.92. We set a chart alarm at 55. See if price will just come back and maybe poke 55, maybe settle at 50. Maybe I get, super lucky and we still settle in at the 55 or the positive gamma pivot point around 50. And this is just one little poke that gets faded. But if I see some profit, I want to make sure I can protect it. So hopefully a profit trap here, upwards of $720. And I've got a take profit already set right here. So we're trading at like $3. I'm in profit. I need to see, probably $4, $5, $6 to be happy. And it could also cash settle. And if it's anywhere between like, 64.57 and 64.42, then I've got some cash coming my way. So hopefully a little bit more of a fade is good. So I'd love a 55. I'd love a 50 in these final 20 minutes. All right. Good class on pinch point. We went through, so we did a couple things. I took notes for the master class. We went through my Go filter, which gave us 18 stocks today, and we literally priced all of them out. I think we attempted to get in 4 trades. I didn't get 3 of them to fill. The 4th one did. It was actually the last on the list here. I got a new trade in the pinch point scanner alerts for FCN. And I did additional take profits on my project options edge. We did those yesterday in this session. So Apple, Robinhood, Palantir, Dell, PayPal, MO for Altria, and Airbnb. Close out those today in all my other margin accounts. I did take a new trade for project options edge today. I posted that in Telegram. So pinch point scanner masterclass, project options edge. I found a trade that paid over $1,000 credit in Tesla. I'm willing to take some shares. The break even would be 234 and 204. The current price of Tesla is like 336. So I thought that was a pretty good looking trade. Okay, let's get some call fly updates here, fellas. Now I'm up about $50 on the trade. Come on. Watching how this butterfly plays out. 339. Okay, 339. If we come back to 50, that's about $150 a profit. If we're at 55, that should be starting to look a little bit better. I'll keep an eye on this one. So there's $100 profit right there. Okay, see if I can get this thing to update. There's my call fly up 87 bucks. So I'm trying to get this one up, to cash settle, but I don't really I don't want to wait 20 minutes if I don't have to. So these final, 20 minutes are pretty important. Let's see if we can stay around 55 or 50 for the SPX today. So giving it back, this is good. That little poke up here. Let's see if we can fade down to like 53, fade down to 50. Somewhere between either this strike or this strike to close out the day. So chart alarm going off down here, that's good. Okay, we'll take a look. So I'm setting a take profit in this one. Now it's up $100. Let me see if I can get this thing to close out for, that was a 280. Let me set this thing at like a 580. That'd be $300 plus the 70. That'd be 370. See if I can get that thing to fill. 50 is ideal. Like 64.50 is my ideal price. If it settles at 55, that still gives me about $270 of profit. Let me set another chart alarm at 50. I mean, price seems to be doing a nice job coming down. Try for 650. Okay, so if we settle in here between 50 and 55, I'd be pretty happy. Time will tell, price will tell. Chart alarm is set at 50. Let's take a look at some top down. Let's look at the heat map, see what's going on today. Eli Lilly making a big jump today, up 5%. Fudge. Did I put in a trade on? I think I put in a ratio spread that didn't take. Anything pending? 630, 640. Oh, I wanted to do 630 by 640 debit spread, just not going to fill. Crap. I thought if we came down to retest the lows. So we just had like an immediate pop up and gap fill. Yeah, I mean, it was too expensive for me to justify doing ratio spreads. I did some ratio spreads on Tesla today. And yeah, I mean, it's just an expensive stock. I mean, dollar cost averaging in is totally fine. If you want to throw some shares in at 630, that was a great spot to buy this thing. Same thing was true on UNH when it was, down to 235 and all of a sudden it popped up to 315, 320. So hopefully we just kind of trough out here and don't fall any lower. I've got a ratio spread of the 270 by 260. My probability should have changed pretty nicely on this one. So UNH, the 260 by 270, it's a 270 by 260 ratio spread. It's down about $70. It was down like $1,000 like a month ago, and now it's down $70. Now I have $622 of credit on the trade with a $1,000 kicker for a potential profit trap. The 260, based on the option chain right now, the 260 is trading at like a 23 delta. So there's still some risk in the trade. There's about a 77% chance of profit on this thing. And I'm hoping that kind of stays true. But if we continue to see some stability at 300, maybe up into that gap fill. I mean, if we fill the gap here at like 340 to 350 or 340 to 360, then my trade should be looking better for about $600 profit. Okay. Yeah, Brad, I am J Brad. I'm using those. Yep. I subscribe to that. I've got an affiliate on those. If you're interested, I can save you like 10, 20% on Tanuki if you like them. I can save you 50% on 0DT for dynamic trends. So like I use this chart every single day. I've got my positive negative gamma flip. I've got my 0DTs. This is real time, not 15 minutes delayed. And there's a lot of stuff I can do here. So my fly is looking pretty good now. Just taking a quick look. I do want to do some gold and silver like requested. Here's my call fly, up about $200. So that's up to 480 right now. That's not bad. That's up $200. Let's go, baby. 52. See if I can get this thing to scream up here towards like, I don't know, this might get real lucky. It's so slippery in the final, 15, 20 minutes. It should be looking better and better and better. Let me see if I can get $5 for this trade. So 485, I'm up $200. Let's go $5. Be generous. So if it cash settles right now, that would put me at, let's see here, 6450 minus 6452 minus 720. I mean, 270. So, I mean, I make $450 on the trade if it settles right around current price. So it's getting a little squirrely. I mean, 55 is fine. 50 is better. Be a real a deer and come down to 50, 64.50. And then Seth, I see your gold, silver. We'll take a look at those two. Yep. So I'm going to spot check this. Set a chart alarm here at 50. A little bit lower would be lovely. Right here at that positive negative gamma flip zone. Come on, guys. You can do it. Part of me just thinks I should take the profit. It's up 140. Gosh, I should just take the $200. All right. A little bit longer. What's crazy is how quickly this butterfly trap is at the very end of the day. So right now it's 46. Okay. So if I'm even close to the 50s, there's 53, 54. Like this should be showing like $200 to $300 of profit. Max is around 720 if we can come any closer to the 64.50 zone. So we just have a little bit left. That profit trap just keeps going minute by minute by minute until we have the close. So here's hoping. See how the cash settles on the day. But I'd like to see this back down to like 64.53, 64.52, 64.50. Come on, Bears. Don't be done yet. Don't be done in the day. Come back to this perfect little pivot point. Tap my chart alarm, and then I should get profits here in these last 13 minutes. Gold and silver. Gold at 33.89. Gold is bullish. It's just wait for dips or wait it out. I mean, I think gold goes higher. I think that's, a pretty solid given. I mean, central banks are storing gold and hoarding gold, and everyone likes gold. This thing hasn't done anything since April. And I'm sure that for the short-term trader, it's been super frustrating. But for the long-term trader, I think gold's been an incredible accumulator. So if we go here, right, and we look at this as resistance, Larry, you should be above 45, right? What'd you take early this morning? You needed it below like 60 or 70. So you should be good. And then 45 was our reverse iron condor. So we should be, I mean, that was trading for like 510, 505. So it should be good to stay above 45. So gold to me, I mean, I think we just have so much support on gold. I just think we stay bullish. I mean, I'm not interested in scalping gold. I could care less. I just think gold is eventually going to be breaking higher and going higher. It's just a matter of all this being accumulation. And if it is, gold's probably hitting, 38, 39, 4,000 an ounce, maybe going higher. But how much longer could this go? As long as it wants. If it wants to do this longer and it wants to do this longer, then it doesn't really break 3,400 and it just consolidates. Maybe we have a little bit of a pullback in here. The one thing I'd like to see for me to get, oh, I gotcha. You got the 40 pin. Oh, I gotcha. So you need this to come down a little bit more. Okay. Yeah, I got the 50 pin. So the one thing I'd like to see gold do is find this 200 moving average. I don't know how it's going to get there. If or how. I mean, it will get there. It's just how. I mean, we haven't hit this 200 moving average since October of 2023. This is a long, long, long bar count. So it's at 480 bars. So I think at best, it's just going to be consolidating. I think it could poke the highs, retest, and that's going to be like a big shakeout. But I still think gold is looking good for that type of move where, I mean, all I'm doing is really, I'm just selling puts. GLD, I'm selling puts. If I get a dip into my moving averages, I'm going to take some trades on GC as well. Any of these moving averages, I want to be establishing some directions. So if I could do, a debit spread here, if I could do a debit spread here, if I could do a debit spread here, gold futures is an easy way to take that trade. I could get a reward to risk that's favorable. Just try to buy the dip and see if it, finds a low, finds a low, finds a low, go out maybe 60 to 90 days. If gold goes higher, that could be a 1% trade. 1% trade. I could add a little chunk of income there. All right, this final 5-10 minutes, like, come on, dude. Price is being a little gnarly here. It's not even Nvidia, man. This is all tomorrow after market. What are you doing? Don't be a turd. Don't run up all freaking day. Like, come back down to 55 or 50. This is what's like the wild side of, zero DT at the end of the day. I mean, look at this thing. We're coming back up to like intraday highs. We still have 10 minutes. See if this is all a fake out. It'd be lovely if it is, but I don't know. We'll find out. We set a chart alarm back down to like 55. This thing doesn't care, man. It's up to fresh intraday highs. It's gone. This garbage. But look at this stuff, man. Like, in the last 20 minutes, we've seen bigger movements in 20 minutes than we've seen the entire day. Just chop fest. From 52 to 61, back down, back up. Can we settle in 9 minutes back down to these, 55 and 50 zones, or are we just breaking highs for the day? All this like, oh, there it is. Nvidia, 64, 65. If it hits this level and settles, I'm so mad. That makes them a butterfly worthless. Gold silver ratio have any relevance? Of course it does. So if you look at gold versus silver, yeah. But the reason I thought silver was such an attractive trade this year was because we had a breakout measured move that was nearly fulfilled, and then silver turned the corner and it's been coming back down. So, I mean, to me, it's like silver could continue to outperform gold, which doesn't necessarily mean that either trade is bad. It just means like silver might outperform gold. So I truly like silver and gold, both bullish for the medium term. And I wouldn't be terribly surprised to see gold and silver outperform, the S&P for the next 12, 24 months either. I think that there is an interesting switch, a little bit more away from the fiat system, a little bit more into, store of value, something that has, gold is going to be seen as like an inflation hedge. It's going to be an anti-dollar play. Bitcoin, same thing. I could just see like precious metals and commodities doing pretty well. So I still like both silver and gold. I mean, technically, like we said here, gold is just consolidating. I mean, we do have some overbought conditions. That's a little concerning on the weekly chart, but all this probably offers is a bit of a top and a pullback. And I think gold still gets bid and bought. You go to the daily chart, it's just consolidating. So lots of consolidation. I'm just selling puts. If we come back down in futures, I'll do some debit spreads. So if we come back down and hit like the 144, the 200 moving average, which again hasn't been touched in 480 bars, just so annoyed at price right now. I thought I had a pretty damn good trade in that butterfly spread, and I'm down like max freaking profit right now. What a piece of crap. Huh. Super frustrating, man. $200, that's now down $200 from a little 10-point slipperoo. Still got time, got a magical 6 minutes if price wants to come back, but seems like it's just run up, run up, run up, trying to get this pressure. What's up with my mouse? Want to get this pressure running all the way into NVIDIA earnings tomorrow. We'll see. I mean, cash settle wise, I mean, I'm curious if I could sell. How high could I sell tomorrow and get some premium? You know, do we gap up and rip up all day and then NVIDIA has earnings? Is that even a smart trade? Let me go out to tomorrow. We've got 4 minutes left here. Let me go to tomorrow. Yeah, I mean, these profits are garbage. Going out to tomorrow's expiration, I mean, even selling above 6,500 is only getting me like 20, 30 cents. No, thank you. So I'll just tackle the day as a new day. No, I mean, it's not going to test it today, Janelle. It's already an annoying move for 10, 15 points, but we're not going to 65 today. Are we trying to hit 65? Maybe through NVIDIA earnings, maybe. I mean, the trade that I have running through NVIDIA earnings on Friday, I mean, earnings on Wednesday after close, Thursday, Friday trading days. I mean, price, if we're going to go up to my 65.30 level, 65.35, we'd have to see price go another 1% higher, 1.15% higher. So, I mean, it certainly can. NVIDIA can move the market that much. It's hard to look at NVIDIA and think that, we're going to blow off this move. But we could, and I think if we did, and I've said this now for a couple weeks, if NVIDIA blasts off and hits a crazy high, like all-time high, and we gap higher, I think that move gets faded really hard. So like if we see like a big move on NVIDIA that runs up to like 200, 205, 210, I think at least in the near term, this thing would like gap up and then fall. You want to take a look at the options chain on NVIDIA. Take a look at the options chain on NVIDIA going out to Friday. Earnings is tomorrow after market. We're looking at like a 1066 move. So based on this, about $10.50 to $11. The average earnings move is about $12.60. So coming into tomorrow's trading day, again, it's not about tomorrow's intraday. It's about after close with earnings, and then you can expect to see about a $12 move plus or minus. So whatever happens tomorrow is just another day of flow, and then what happens after hours is NVIDIA earnings, and I'm expecting to see somewhere between like a $10 to $12 move. Okay, if you wanted to buy, if I wanted to buy the 182, buy the 180, you're paying 1059 for what's probably going to be like a 1060 to $12 move. So that's just kind of like the at the money trades, right? It's not bad, but I mean, as far as I don't know if the strangle is going to pay much, but let's find out. If I went all the way up to like, yeah, these are so far out of the money, like doing a 10 delta, a 200, and a 10 delta. I mean, look at how far down I can go. I can only go up about what, $18? I can go up $18 on the call side for a 10 delta. And I can go down for a 10 delta. I can go down like, almost $35. That's wild, man. That pricing skew is so crazy. Oh shit. I just got filled on. Oh, damn it. Sorry. I just got filled on a trade. It was a credit spread. Hang on a second. What is going on here? Don't fill me and screw me over here. Son of a biscuit. No way, dude. This is going to be like instantly down in oh, fudge. Damn it. What is happening? Hang on a sec. 65.75 call. Let me try to get out of this thing for $1.70. All right, just close that thing out. I thought I canceled that trade. All right, so at least was a small winner. Yikes. That made me jump a little bit. And then the 70 by 80 cancel. I could have swore I canceled these trades. Anyway, butterfly spread needs a lot of help in the final minute. I'm not getting it. Son of a biscuit, man. Look at this stupid freaking price. Sometimes 0DT makes me so mad. And I said this morning that we're probably going to look at either hitting the 6470 50% ATR or the 6410. And what did price do? Waited all day to make a move. And then finally, where did it go directionally? To the 50% ATR on the call side. Sneaky, sneaky. All right. So I won on daily profit play. I had the reverse iron counter. That was a winner. I had a call fly that slipped through my fingers. Unfortunately, that was a small loss. I took a net winner on that credit spread by 10 cents. That was just a slippery trade, which would have ended up being a small loss. This thing settled at 66. I freaking lost. So anyway, lost $200 on the call fly and made 70 and made 170 on my other DPP trades. So net positive on the day, but that call fly was annoying because it was up about $200, and I let that slip to a full loss at $200. Crikey. No fun. Anyway, whatever. It's fine. P&L's positive on the day. I can't complain, but I will. So pretty dumb price action, to be honest. I mean, it literally waited all day. And I mean, look at this stuff. You know, I mean, you don't even have liquidity here on TradingView to track this stuff. 64.53, it gaps up in a 5-minute candle, gaps up in a 5-minute candle. Like, that is a silly 15 minutes of closing. But you know what? It is what it is. You decide to place a trade, you take the risk. It is what it is. If you did get that 65, oh, that would have actually been a winner. That 65.92, that was filled for $2. That would have traded and closed for what? 90 cents. Yeah. So 64.65.90, that would have been filled for $2, traded for 90-cent settle. You would have made a quick $1.10 on that trade. But it was filled at the last minute, and I didn't want to be in that trade. So there it is right there, trading for like $1. So if you didn't have a chance to close it with me for 10 cents like I did, then you actually fared a lot better and grabbed an extra $100 out of that trade. So what a stupid end of the day, but you know, net took some profit. I'm a little miffed about that butterfly though. I thought this trade was looking really good with this like 50 and 55 handle. Those were the big gammas all day, man. And price was slow, getting right into my sweet spot, and then just ripped here those last like 30 minutes. Frustrating, as they say. So anyway, tomorrow's a new day. Let's tackle it. Okay, we good on gold and silver. What's up today? Let's take a look at the heat map. Everything could probably turn the corner here at the end. 53% of stocks advancing. A lot of it was like probably a late surge in the day. Could be up on anticipation that, hey, it's NVIDIA day. It's another day, blah, 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 whatever. But industrials, look at this thing. GE Aerospace, Boeing. I mean, all these like defensive spending things are going up. Eli Lilly had a great day. Mag 7, nothing crazy, but it's all about NVIDIA tomorrow after the close. Uber up to some fresh highs. Yeah, I mean, that's kind of it. Financials up. So more stocks advancing than declining, but industrial is probably the best rotational space. That's a big deal. If I go into my sectors here, oops. So for today's trading day, materials up, consumer goods up, services up, financial up, healthcare up, nothing in the red. Go out to Monday. Let's go to last week. I mean, oil and gas down, industrials down. Go out a couple weeks. Materials from a little bit of a dip getting bought. Materials, consumer goods, consumer services. Healthcare's made a big bounce back. A lot of that is the UNH bounce as well as LLY for Eli Lilly. Industrials slow but had a good day today. Oil and gas still sloppy. Technology is starting. This is interesting. Look at this. This is the rotation I'm talking about. Okay, upward swing on basic materials, upwards on consumer goods, flat but steady on services, up in healthcare, technology down, utilities flatter, telecommunications up, but that's led by so few stocks because it's such a heavy weighted sector. But interesting to see like tech taking a bit of a dip. I think NVIDIA earnings will be like the make or break in this like near term rotation for tech, AI, for software stuff. So, anywho, all right, that's the day. Market finished positive. I mean, again, I try not to complain too much when the market's up and I'm making money on the day, but it was kind of an annoying day for 0DT. Despite being positive, it was annoying that I had such a good profit on one trade that slipped through and ended up being a loss. So that did bother me a little bit. But anyway, all is well. And let's come back and do it again tomorrow. So what else happened here? Nothing. Just a little 55 trades today. No big deal. Profits being had all about NVIDIA, expecting like a move of anywhere between $11 to $12. So just make a note of that. I posted this chart in Telegram yesterday. I also posted a video if you'd like to watch it. This video is like 20 minutes. I posted this in TradingView, so check that out. NVIDIA earnings, then we have U.S. unemployment claims and GDP, then we have PCE on Friday. NVIDIA is nearly 8% of the market cap in the S&P. It's capable of moving the market. I'd like to see it not front run the whole freaking market tomorrow, because I've got a 65.35 level on my SPX trade for waterfall income that I'd like to still be profitable. I'd like to see if that call wall at 6,500 can hold. So hopefully price will not get back to 64.80 or not break above 6,500. I don't think it goes in a straight line. Okay. We're settling here. We'd have to be up around 0.5% tomorrow. The market, does it feel like front running NVIDIA? Maybe. I don't know. Let's address it tomorrow. But I'm hoping that 65.35 is going to hold. So just for fun, 65.35. And technically I have risk until 40. I don't have any risk on this trade until 40. So as long as price stays below this level, I'm risk-free on my waterfall income trade for the 29th. Ideally would be 35 because that's going to be my sweet spot. That's a $500 payout plus the $1.60. And I'll know that more by Friday. So that trade to this trade. There. And then I'll just label this one waterfall income 829 trade. So if we can stay below these lines, then I've got minimum 160, potentially 660 in profit. And we'll see what happens. I'm hoping that this resistance will hold, or if we hit it, we fade it, whatever. We only have NVIDIA through Thursday and Friday. So like earnings tomorrow, Thursday, Friday is the follow through. Whether there is or isn't, we'll find out. Okay. Big bullish candle on gold. I don't know. I mean, gold's not bullish, man. Like it's bullish for the day, but it's the same range we've been seeing. If you want to tell me that gold is bullish, then break all-time highs at 35.10. Then I'm thinking, hey, this thing's resuming. All gold is right now is accumulation. If you're buying gold, this is what I'm doing. I'm selling all sorts of puts and creative ratio spreads in here. That's all I'm doing. If we want to chop around, I'm not interested in any direction. I'm just accumulating shares, holding for the last 3 years, selling more puts, adding to my exposure, but I don't want to get assigned necessarily. And if we go up, great. You want to talk about bullish gold? We're breaking all time highs. You want to talk about bullish silver? Then we're breaking recent highs. There's silver at 38.58. If silver can get above $40, I mean, silver gets really exciting above $40. We break above $40, $41. This thing can run. This could be the trend, and then starts to get a little bit more capitulation. And we have all-time highs at around 48 to $50. That's a big chunk of profit on silver. I still think silver can go higher, but all-time highs would be a pretty good target to take some profit. I'm going to be up like close to $80,000 or $90,000 in silver. So I think it's probably safe to protect. I mean, silver right now for the whole portfolio it's been one of my favorite trades for the last couple of years. It's up about 50 grand, $48,000, almost, $48,000. So if this gets up to like $70,000, $80,000 with that run up into the all-time highs, I'd be stoked. Okay. All right. Sky West looking good. Nice. Okay. It's good income trade on Sky West. Little non-US doing well. Tesla added a nice trade today for Project Options Edge. This one, I'm going to just label both of these. So a 230, 220. And the 260, 250. There we go. So bull put spread looking good. Ratio on Tesla. Okay. I think I'll wrap it up there. A little frustrated on how the day closed. That was some pretty silly price action these last like 15, 20 minutes. It is what it is. Tomorrow's a new day. I won the day. I mean, I'm not that mad. It's just a little annoying to have like a good profit, and I thought was a pretty safe profit trap. Kind of pinning, like when we were down here at 40, I'm like, well, let's see if we can get to 50, 55. And I pinned it today. It was looking really, really good until literally the last 30 minutes. But that is the slippery nature of a zero DTE because it's all price sensitive at the end of the day. And I had the profit. I didn't take it. So that's on me. All right. Alibaba, I haven't taken a look at it. I haven't looked at it in a second, but Alibaba, I still like it. I mean, Alibaba had a lot of shares back here in the 70s and 80s, and I took a lot of profit once we broke these highs in the 140s. So I don't have shares of Alibaba anymore, and I think I'm pretty limited on my exposure right now. I have Baidu. I've got some shares of Baidu. This is still kind of upside down. Baidu's been like the lagging of the two. I still like Alibaba for this, dynamic support, head back up the highs. I think that we go to a symmetry trade. If this is all support and this is all resistance and we break and go higher, I mean, to me, this is 1, 2, 3, 4, 5. We're just not there yet. So I think if you're patient and trading this dynamic support, I think Alibaba can still move in waves up to like 180. So I know we haven't spent a lot of time talking about China, but I think China is still a good play. Baidu is looking better, but wake me up when this thing gets over $100 and actually stays there. This trade has been just so exciting and then gives it all back. So exciting. So for months, it doesn't get above like 95. So we clear 95 with some conviction, maybe get above 105. There's a good measure move up here to 116. So I have some shares and I'd love to take some profit there and hopefully see if this can go all the way back up to this level. Like this low, love this high. 150 to 160 would be a great profit target on Baidu. But we have to break out of this garbage. So we break up and go. It can go really fast, but I mean, that's my profit target. Okay. Thanks, Brad. Appreciate that. Thanks for finding me. So Adrian, you're good on that for gold. I mean, that to me on gold is not like super bullish. It's the same chop. It's the same range we've had since April. I am bullish on gold. I just think it's going to be more months of consolidation until it breaks all-time highs. We break all-time highs, awesome. I still think it has to pull back to the 200 moving average, whatever that does to make it happen. Whatever, let's get it. Maybe it's a shakeout in the equities market. Maybe it's whatever. Shake out the loose hands, see who's really interested in holding gold. But we might have a pullback. So overall, China, Alibaba, Baidu, I like. KWeb, I took some profit at these highs. I'm out of those shares. MCHI, this is like a China ETF. This thing's up to fresh highs. JD, I'm still owning some shares. I've got a covered call. Break evens at 33. I think I still have some shares with covered calls. I think it's out to the end of this month. Let me check my DTE. So tomorrow I'll spend some time pruning the portfolio. So QQQ, I've got a covered call here that I'll roll. MicroStrategy, I've got some covered calls that I'll roll. Yep. I mean, these are fine. I mean, these cover calls are up $9,800. I'm going to roll them. I'm going to take some more profit and give me some more time. SPY, got to roll some calls. So all these right here. I'm going to roll all these calls tomorrow. So SPX is that was today. So these trades all expire on Friday. So I've got to roll a bunch of calls on these positions. And that's okay. So I'll roll them. And hopefully net on the accounts will be, I don't know, Qs can probably roll for a couple of dollars, MicroStrategy for probably $3, $4, $5, SPY for probably $2, $3, Russell for maybe $1 or $2, Nvidia maybe for 50 cents or $1, Tesla for a couple of dollars. So I could probably add another couple $1,000 per account tomorrow and just keep chipping away at some of those covered calls. So that'll be the to-do tomorrow. I'll also go back in. We'll have a daily profit plan session in the morning. If you're going to come join me tomorrow morning, daily profit plan every single day, Monday through Friday at 9 a.m. Eastern time. Tomorrow's watch list Wednesday. We will be highlighting my pinch point scanner. We used the scanner today. I found 18 setups. I priced out 4 of them that were really good. Tried to get them filled. They just didn't get filled, but I got filled on 1. So we have a new trade on pinch point. We'll do the same thing tomorrow. And we're going to go into a little bit of a wider filter with the get sets instead of just the goes. So daily profit plan in the morning. I'm watching waterfall income for that trade on Friday. Double up. So I already issued the newsbreakers trade for Nvidia, so that's already out there pending. Pinch point. We have a day 2 workshop. So we're doing a masterclass series on pinch point this week. We had a session today, core strategies plus trading. Tomorrow is mostly review and trading. Just focus on the process, trying to find some trades. Okay, Project Options Edge, new trade was posted today. Education stuff. I've got to send this out to a couple people that requested it yesterday. So this is a full course for 13 different option strategies, strategy guide, PDF, risk graph, learning options, quick guide. I think it's 4 videos. Trade the market up, down, sideways. Get started for $27 type stuff. Like just building a pretty strong foundation if you're interested in trading options. Which I think if you like, if you like managing risk, which nobody does, but if you want to manage risk better, trade options. If you want to have the ability to have leverage and trade the markets up, down, sideways and play a little chess with the markets and just win based on price and time, learn how to trade options. I try not to make options complicated. I really don't. I knew nothing about options. I don't know. It's like I started trading options back in like 2010, 2011, after going through the great financial crisis. Like, hey, let's not have that happen again. How do we protect our portfolio? Learn some basics of options, right? And then it turned into I can develop income trades and never own the underlying shares, and I can trade options to just make money. So the last, close to 10 years has been just income trading and trying to find some creative strategies that let me make the market or trade the market up, down, sideways. So I like it. It works. It's been some of my best risk adjusted returns I've ever had over my career. And I'm not crazy aggressive. Like I'm a very conservative trader. I manage risk first and I let profits take care of themselves. I mean, usually that's the thing is manage risk, upsides there, manage risk, trade against price and time. It works. So anyway, if I can help, that's what I'm here for. Right. But I'm not a one trick pony. These are a lot of services for options courses. I still trade Forex. I still trade futures. I still trade whatever I can shake a stick at. I trade crypto. Like I'm in the markets. So that's all. All right. tariffs to countries that charge taxes to US tech companies, but not to China. Yeah, I mean, the tariff talking is not going to stop. It's not going to stop. I mean, and again, it doesn't freaking matter. Like tariffs are here. Tariffs aren't going away. It's not going to break the economy. I think the market is. We've got an administration that wants to spend a bunch of money and add to fiscal deficits. The fiscal side is running hot, like we have a crisis. The monetary policy side is softening and going more dovish, and we're fueling a melt up. I mean, I think unless Powell like really wants to be stubborn and fight back, and I don't know. I mean, his legacy is already like somewhat damaged because of all the noise between him and Trump, or mostly just Trump. But I do think Powell is going to kind of appease the masses and take a 25 basis points cut. I think the Fed has probably seen that if they are going to just not cut rates, they're going to slow down the economy, and it's because I think you know you have like an unstoppable force in an immovable object, and the Fed is kind of stepping in the way, right? If the whole world is willing to spend money, China, the Eurozone, US, Japan, and then you take those developed countries into like emerging markets, if everyone's looking to spend money, if everyone's like, you know what, the US has been doing it for decades, let's go fiscal policy style, that is a melt up, right? That's going to raise PMI, that's going to raise inflation, that's going to happen globally. But we can grow with that inflation as opposed to we're just going to start holding rates the same and be restrictive. Every central bank around the world's been cutting rates, except for us. Now, it is highly anticipated that we will be cutting rates, which is what the plan is in September, is the Fed's going to be cutting rates. To what degree? I mean, the markets are showing somewhere between 5 cuts by the end of 2026. So I would imagine it's going to be a 25 basis points cut in September, and then possibly one more cut in December. If they sprinkle in another one through October, okay, fine. But through 2026, Powell's gone and somebody else steps in, and it's going to be a pretty consistently dovish Fed. So then you have an economy that's running on fiscal policy with an aggressive administration that wants to grow, and deregulate, right? And then you have a monetary policy that's going to be also a little bit more accommodative. It's rare to see the Fed cutting into all-time highs and into a growth mentality. But I think what they're running the risk of is if they don't cut to accommodate, we're going to stall the growth. And at these crazy high valuations, I think the market needs a rotation. One thing I thought was interesting is think about this. You're maybe reading this stuff on Twitter and online is, it's never been so expensive to be in the stock market. Well, that's true. Okay. Like if you have, let's say if you're in Mag 7, and I'll wrap it up here in my final thoughts on the day. So Mag 7. Okay. Mag 7 is trading around like a 30 times multiple. Right. So like 30 times price to earnings, 30 times price to sales. Like it's an expensive stock because historically it's like 22 or 23. So it's overvalued. Doesn't mean it can't run higher or hotter. But the reality is, what about the 493 trading at like 15 times multiple? Right. So what happens is money can rotate from this to this. Right. So if you go from a 30 times multiple, get out of what's expensive, go into what's cheaper, you still have multiples at 21, 22 times earnings, but it's going into more value driven positions. It doesn't have to be a crash. It can just be a rotation, And if you see this in price action, the Russell has been doing very well this last month. Okay. The Dow has broken all-time highs and finally caught back up with the S&P and the Nasdaq breaking all-time highs. That's an interesting rotation. Right? Basic materials, financials, utilities, sectors that don't typically lead a crazy healthy bull market are leading right now. It's a rotation away from Mag 7. And it was a lot more apparent when the market fell back in March that it was all a rotation out of Mag 7, but then it was like the best thing to buy because tech ripped like it typically does in a resilient way. So I still think that if you look at a chart like NVIDIA, a chart like Meta, a chart like Microsoft, chart like Netflix, chart like anything that looked like this in April, and then it ripped to all-time highs, all of those charts, in my opinion, I don't want to buy those highs. I don't. Like, I think the market has to pull back somewhere between a low and a high, and there's opportunities to position for a dip. Maybe scoop up on the dip. Right? If it goes higher, that's fine. But I just think it's more of like a hot mess at some point, like a bubble at some point. But if we get a pullback on those stocks, or we have the stocks that did this during April, they go down, they went up, and maybe there's hanging out here, right? Those stocks might have a chance to finally show up. So I'm curious. I'm curious how this year plays out. I think that there's very little to disrupt this market. Trump says whatever he wants, it's noise. Fed's going to cut in September, fine. It's noise. I just don't think the market breaks. I think this is a bit of a steamroller with an agenda that's trying to go higher. Where does it break? Ultimately, it could be a lot of things. The economy breaks from the consumer. The economy breaks from. I mean, think about how much bearish sentiment we've had this year. The consumers have been frustrated, right? Prices are going higher everywhere they look. People aren't feeling the gains of this growth. A market that jumps up 30% from an April low, people don't feel that, right? If you're an investor, yeah, sure, maybe you're up 8% for the year, 10% for the year. If you're trading, maybe you're having a good year. But if you're just somebody working for their paycheck every month and seeing price around you get more expensive in every facet of life, you're not feeling the gains of this stuff. And so you have this like growing frustration out there. And so it's like that's not enough to turn the markets. It's not. It's like the only equalizer would be like if house prices came down 20%, then yeah, we'd probably roll over quickly. But house prices are probably fine. And the one thing we keep talking about here are bond yields. If yields at 4.26 don't really budge, everyone's begging for this Fed to start cutting rates. It doesn't fix anything on the long end of the curve. This is the long end of the curve. The short end of the 2 years or less, that's what the Fed's cutting. Right? They cut rates on the short end. They're still going to see a sticky long end because global yields have been rising everywhere. So, unfortunately, I don't think it's going to be as awesome as everyone thinks to see the Fed cut rates and see yields not really do anything. But 12 months from now, maybe if we are growing, like that does put a lot of deflationary pressures out there, which is good. So I just don't think it's going to be this immediate collapse. I don't think it's going to be immediate rip. I don't. I mean, I think that everyone and their dog thinks we're going to have a recession, so it's probably not going to happen right away. Everyone thinks it's going to be a crash. It's probably not going to happen right away. Look at every YouTube channel. Like I don't talk about doom and gloom. Maybe I could have more subscribers if I want to get clickbait and make the craziest, scariest thumbnails. But I'm just in the market every day. So doom and gloom sells, but unfortunately, doom and gloom is like the dumbest way to trade. Because are you going to be right, once every 4 years? And maybe you're right to the tune of 15 or 20%, and then you buy the dip and the market's up for 4 straight years. Like, stop being a bear. The most important thing is manage risk. So when the market does take a haircut, you're okay. You survive. And then you have dry powder to buy more. But it's a feeding machine that like is never satisfied. Right? I mean, if there's some type of sliver of optimism, this market tries to find it. And this year, since the pivot in April, this market's been nothing but like blinders on and earmuffs on, and all it is caring about we're going to grow, we're going to grow, we're going to grow. And now we want to see if the Fed will play ball to support that growth. And perhaps Powell's legacy could be, what? Yeah, we came in and we did adjust monetary policy in order to accommodate the growth that the U.S. wanted. And so you have like fiscal policy and monetary policy joining forces and playing ball. And that's what happened back in the late 90s with Greenspan. We were seeing like global PMIs rising and markets went higher by a ton. That was the roaring 90s. So it could happen again. But maybe it's all different this time. So just approach it with good risk management and take it for what it is. I think the market's going to find a way to go higher. I think there's a lot of resiliency baked in. We'd have to turn a very, very ugly, nasty corner. And who's going to be the most vocal if the market's dropping? Probably Trump, right? And Trump can blame Powell. He can blame the world. He can do whatever he wants. But if the market's down here, we're going to find out if the market's capable of going down again, or we're going to find a way to trough, and we're going to go higher and higher and higher. And it's just repeat the buy the dip, because that's what this new market is. And it's been that way for the last, 15 years. So if I can, teach one thing, it is risk management's the most important thing, and don't overcomplicate it. If you give the market time, it's probably going to find a way to go higher. And if you're managing risk in those little pockets of bearishness, you're going to survive it and you're going to be fine. So, some of my favorite trades right now, I've got running in a lot of places. I mean, I'm trying to simplify my portfolio. I've got a lot of positions here. There's a lot for me to digest every single week. But once I kind of get through a lot of my big expiration cycles, like October, November, December, and into January, I mean, this whole portfolio gets cleaned up where I have, maybe 5 or 10 core positions, and that's it. But as I sprinkle in trades throughout the year, it's like these are all income trades based in probabilities, and I've got enough buying power and cash to play with it. So anyway, that's it. I'll let you go for today. Let's come back and do it again tomorrow, and we'll tackle another daily profit plan tomorrow at 9 a.m. We'll be on Watchlist Wednesday. I'll showcase a little pinch point scanner. We'll have a masterclass for pinch point scanner at 1:30 p.m. tomorrow. And we have NVIDIA earnings after hours, Thursday unemployment claims and GDP, and then Friday is core PCE. Does it matter? I don't know. I want to see if just the price action will stay below 6,500. I'd like to make some money on that waterfall income trade. If we get a profit trap, that could be pretty interesting going into Friday. But it'd be a lot easier just to see it stay below 65. So we'll see. Is it more probable that what's S&P? Oh, S&P. Oh, literally S&P pulls back to 60. I mean, look, the technical side, it's like I think we pull back to previous all-time highs. I think the market needs a little bit of a shakeout. I don't know what the makeout. I don't know what the makeout of this is. I mean, maybe it's a rising wedge in the short term. This whole rising wedge kind of started here, right? So maybe the market does something like this and then falls. We correct back to this level, and then this is our support. All this dynamic support right in here, and then from 60, 200, 60, 100, 6,000, I'm buying the dip. I think it's a good trade. If it's risk defined, I know I can't lose more than what I put into the trade. So that's what I'd say. I mean, yeah, 60, 63, 6150, 6,000, like big support levels down there. How do we get there? I don't know. I honestly don't know. It's like, is NVIDIA going to have terrible earnings? Maybe. And the market freaking hates it. And then it dumps a couple percent. Okay. Well, technically, we need to pull back anyway. So whether Trump wants to try to fire somebody at the Fed or NVIDIA has terrible earnings or employment numbers are garbage, it doesn't matter. If the price rolls over and it proves it's going to break a trend line and go down lower, expect a pullback. So I've been saying this for like literally a month or so. I expect a pullback. I'm not bearish. I just expect a pullback. I'll pull back to position for dips would be fine. Okay. The higher we run, the hotter we run, the more ugly a correction is going to get. And it is kind of weird to see, like last year, the market shrugged off a July, August 10% correction. This year, the market hasn't corrected more than 3%. Since we had this dip in April, this market hasn't pulled back more than 3% since literally the bottom in April. That's a little crazy. It's a little overcooked. It's a little extended. It's a little overbought, but doesn't mean it has to stop. I might want it to, but it doesn't have to stop. So I think it will pause. I think it will turn over. I think September, October, this window from like now into like mid-October is a perfect little pause window, a perfect little correction window. And I think, like I said, the sustainability of this bull market is as long as we don't do too much damage below these areas. If we start breaking below these areas here, I think the bull market becomes questionable. If we find a lot of dynamic support, then the market can find a way to plug away and still go higher. Okay, good stuff. All right, come back and join me tomorrow morning, 9 a.m., youtube.com/financial wars, or come into my Telegram channel. I'll post this in the chat here. I've got a couple messages. If you'd like to join me for the daily profit plan, you can join me here in Telegram. So I'll add this. This is Chris Pulver Telegram. Okay, and then if you'd like to opt in for my daily profit room, you can join me every single day. I had somebody come into the room today and she said, "Where are these alerts posted?" I mean, look, I'm running a free session. If you want my trades and alerts, it's a paid service. But I'm happy to show up every single day and trade with people live. If you want questions and details and education to trade with me and alerts, then there's a service with that. But I'm happy to bring in as many traders as possible. And you'll get some nuggets every single day. We'll talk markets, we'll talk shop, we'll talk strategies, we'll do all sorts of stuff. Profit plan, 9 a.m. weekdays. There you go. So a couple messages right there. Okay. All right. Sounds good. Have a good rest of the day.